By the end of this video, you'll understand the 3 economic forces driving the biggest tech price shock in years, why Japan's market is uniquely vulnerable, and what industry insiders expect to happen next. This isn't just about tablets. It's about where consumer tech pricing is heading in the AI era. If you want to stay ahead of these market shifts and understand the forces reshaping tech pricing in Japan and beyond, hit subscribe now. We break down these economic signals every week so you're never caught off guard. Good day, everyone. I'm Polaris AI. 32%. That's how much more you'll pay for a Xiaomi tablet in Japan this week compared to last month. Not a typo, not a limited promotion. A real, permanent price increase that hit without warning, and it's spreading across their entire tablet lineup. If you've been following the tech market, you know price hikes happen. But this scale? This fast? That's different. This is the first visible consumer impact of something much bigger happening behind the scenes in global tech supply chains. And here's why you should care, even if you're not buying a Xiaomi tablet. This isn't about one company or one product category. This is a signal that the cost structure of consumer electronics is fundamentally shifting, driven by forces that are reshaping the entire industry right now. In the next few minutes, you're going to learn 3 things. First, the real reason behind this price shock, and it's not what the headlines are saying. Second, why Japan is getting hit harder than any other market. And third, what this tells us about where tech prices are heading for the rest of 2025. Let's break it down. Now here's where it gets personal. You might be thinking, okay, Xiaomi raised prices in Japan, so what? I don't live in Japan. I don't buy Xiaomi tablets. Why does this matter to me? Because this isn't a Japan story, and it's not a Xiaomi story. This is the first domino. The reason Xiaomi cited for this price increase. 3 things. AI-driven demand for memory chips, supply chain cost inflation, and currency volatility. Sound familiar? Those aren't factors unique to Xiaomi or Japan. Those are global forces hitting every electronics manufacturer in every market right now. When you see a 32% price jump on consumer tablets, a category known for razor-thin margins and brutal price competition, that tells you something fundamental has changed in the cost structure. And when one major player moves prices this aggressively, others will follow. They have to, because they're all facing the same cost pressures. So whether you're in the US, India, Europe, or anywhere else, this price shock is coming for the devices you're planning to buy this year. The question isn't if. The question is when and how much. So let's map out what's actually happening. This price shock isn't random. It's the result of 3 distinct forces converging at the same time, each one amplifying the others. First, AI demand. The explosion in artificial intelligence applications over the past 18 months has created unprecedented demand for high-performance memory chips. We're not just talking about data centers. We're talking about edge AI devices, smartphones, tablets, laptops. Everything is getting smarter, and everything needs more memory. Second, supply chain costs. Even as pandemic-era logistics chaos has eased, the structural costs of manufacturing and shipping haven't come back down. Labor costs are higher. Energy costs are higher. Compliance and regulatory costs are higher. Those costs don't disappear, they get passed down the chain. Third, currency pressure. The yen has been under sustained pressure, making imports more expensive for Japanese companies. But it's not just Japan. Currency volatility is hitting markets worldwide, and manufacturers are finding it harder to absorb those swings. 3 forces. Each one would be manageable on its own. But when they hit simultaneously, that's when you see a 32% price jump. Let's break down each one. Let's start with AI demand, because this is the force most people underestimate. When ChatGPT launched in late 2022, it kicked off a race. Every tech company, from giants like Google and Microsoft to startups you've never heard of, started pouring money into AI infrastructure. And that infrastructure runs on memory. Lots of it. According to industry analysts, global demand for high-bandwidth memory chips surged by over 23% in 2024 alone. And here's the kicker. That demand is concentrated in a few specific types of memory. HBM, or high-bandwidth memory, GDDR, graphics memory, and high-capacity DRAM. These aren't niche components anymore. They're the building blocks of every AI model, every large language model training run, every real-time inference system. And the problem? You can't just spin up new memory production overnight. Building a new fab facility takes 3 to 5 years and costs upwards of $4.2 billion. So supply is constrained. Demand is exploding. And the manufacturers who can produce these chips? They're prioritizing the customers who pay the most. That means AI data centers get first priority. Consumer electronics? They're at the back of the line. So when Xiaomi goes to buy memory chips for their tablets, they're competing with Amazon, Google, and Microsoft. And they're paying a premium just to secure supply. That premium gets passed directly to you. Now let's talk about supply chain costs, because this is where things get ugly. You've probably heard the narrative that supply chains have recovered since the pandemic. And in some ways, that's true. Container ships are moving again. Ports aren't as backed up. But recovered doesn't mean cheap. It means functional. And the cost structure? That's permanently higher. Here's why. Labor costs in manufacturing hubs like China, Vietnam, and Malaysia have all increased significantly. Workers who were willing to accept lower wages during the pandemic now have more bargaining power, and they're using it. Energy costs have spiked and stayed elevated, especially in regions dependent on imported natural gas or oil. That directly impacts manufacturing costs. Regulatory and compliance costs are higher. Governments around the world have tightened environmental, safety, and labor standards. Meeting those standards costs money. And shipping costs? Even though container rates have come down from their pandemic peaks, they're still running 30 to 50% higher than they were in 2019. All of those costs, labor, energy, compliance, shipping, they all add up. And for a product like a tablet, where the margins are already thin, even a 5 or 10% increase in production and logistics costs can force a significant price hike. Xiaomi didn't have a choice. They either raise prices or stop selling the product. They chose to raise prices. And now the third force, currency pressure. This one hits Japan especially hard. The Japanese yen has been under sustained pressure for over 2 years now. At one point in 2024, the yen hit 159 to the dollar, a level not seen in decades. What does that mean for a company like Xiaomi? It means every component they import into Japan costs more in yen terms, even if the dollar price stays the same. Memory chips? Priced in dollars. Displays? Priced in dollars. Processors? Priced in dollars. Even if Xiaomi negotiates the same price with their suppliers as last year, the weak yen means they're paying more when they convert. And it's not just Japan. Currency volatility is hitting multiple markets. The rupee, the won, the euro, all of them have experienced periods of weakness against the dollar over the past year. And when you're a global electronics manufacturer operating on thin margins, you can't just absorb those currency swings. You have to pass them on. Now here's what most people don't realize. Currency impact isn't just about the immediate exchange rate. It's about hedging costs. When currencies are volatile, companies have to spend money to hedge their exposure, essentially buying insurance against future swings. Those hedging costs eat into margins. So even if the yen stabilizes, the cost of managing that volatility doesn't go away. And that cost? It shows up in the price you pay at checkout. So what does this look like in the real world? Let's talk about who actually gets hit by this. First, students and educators. Tablets have become essential tools in education, especially in Japan, where digital learning initiatives have expanded rapidly. A 32% price increase means schools and families that were planning to buy devices this year now have to either cut their budgets elsewhere or delay purchases. That's a real impact on digital access and learning outcomes. Second, small businesses. Tablets are widely used in retail, hospitality, and field service businesses across Japan. A restaurant using tablets for orders, a delivery service using them for route management, a small retailer using them for inventory. When the cost of replacing aging devices goes up by a third, those businesses face a tough choice. Absorb the cost, raise their own prices, or make do with outdated equipment. Third, price-sensitive consumers. Japan has a large population of budget-conscious consumers who rely on mid-range brands like Xiaomi for affordable access to technology. For them, a 32% price jump isn't just inconvenient, it's a barrier. It means either stretching their budget, choosing a lower-spec device, or going without. And here's the broader point. This isn't just about tablets. If memory costs and supply chain pressures are pushing tablet prices up by 32%, what's happening to smartphones, laptops, smart home devices? The answer is the same thing. It's just not in the headlines yet. Alright, let's bring it all together. Xiaomi raised tablet prices by up to 32%. The reason isn't one thing. It's three things happening at once. AI demand is driving memory chip shortages and pushing prices up across the board. Supply chain costs have structurally increased and aren't coming back down. And currency pressure is hitting Japan harder than most markets, making every imported component more expensive. Those three forces aren't unique to Xiaomi. They're not unique to tablets, and they're not going away anytime soon. So what should you do with this information? If you're planning to buy a tablet, laptop, or smartphone this year, don't wait. Prices are moving in one direction, and it's not down. If you're a business owner relying on consumer electronics, start budgeting for higher replacement costs now. And if you're an investor or analyst watching the tech sector, pay attention to how companies are managing these cost pressures. The ones who can navigate this environment will separate themselves from the ones who can't. This is the new reality of consumer electronics pricing in the AI era. Understanding the forces behind it gives you an edge, whether you're buying, selling, or investing. If this breakdown helped you see the bigger picture behind the headlines, subscribe now. We'll keep connecting the dots on the economic forces that matter to your business, your investments, and your wallet. Stay ahead of the curve. Next time, we'll be looking at how Japan's semiconductor push is reshaping the global chip supply chain. You won't want to miss it. Thanks for watching. I'm Polaris AI, and I'll see you in the next one.